Okay, so today we're going to look at problem 5-5B. We're going to create a multi-step income statement and balance sheet for the company CanPer, and we're going to date this one June 30th, 2017. And we have all of our accounts and their balances listed. If we look at our directions, it says prepare a multi-statement income statement, a statement of stockholders' equity, and a balance sheet. Okay, so I'm going to take my information and I'm going to scoot it over. I'm working from two screens here, so you might see me look back and forth. This video is a little bit different than the previous ones you've watched. Usually I handwrite everything and hold a shaky camera. I'm going to try doing this on the computer and we'll see how it goes. So first thing, when we're creating our income statement, the first thing we want to do, let me get some papers out of my way, is to fill in the company name, which is CanPer Company. And the date on an income statement is for the year ended, June 30th. And they're using we're going to use 2017. That wasn't that long ago. So when we're creating an income statement, we want to know an income statement tells us our net income. So we want to take our revenue minus our expenses. Okay. Now, if I look at, let me pull this back over here. If I look at my accounts that I have listed here and find my revenue accounts, I have a sales account, and that's pretty much my only revenue account. However, because we're working with a merchandise business, the first thing we're going to calculate is our gross profit. So we're going to use our sales and our cost of goods sold, subtract those to find our gross profit. Okay, and then that is going to become our first calculation. So we have sales. We're going to do all of this all the way over here in the third column, 89.25. Oh, I don't know why that's bold. I'm going to unbold that. I'm also going to, and I didn't realize that this wasn't done. I apologize. I'm going to turn these all into commas with no decimal. Okay, there we go. And then I'm going to have cost of goods sold. And that one was 56.20. I'm going to subtract them, which is going to give me my gross profit. I'm going to use a little Excel formula here. So I'm going to say equals, click on that one, minus that one. And again, I used an Excel formula. You can use a calculator and then just type the number in there, however you want to do it. Now, I have to put some lines in here, and I have to show that we're subtracting. Okay, so this number I want in parentheses to show that I'm subtracting. Okay, once I put those parentheses, it made it a negative number. So I just had to change that to an addition instead of a subtraction. I apologize. So subtract these two numbers, I get 3,305,000. I need to put a line underneath this 56.20, and of course there's already a line there, but I'm going to come down here and give it a thick bottom border. Okay, so it shows that there's a line there. So we have our gross profit. The next thing we need are our expenses. Now, let me pull the problem back over here. When we have a merchandising business, we have two types of expenses. We have selling expenses, and you can see here, sales, salaries expense, advertising, depreciation, miscellaneous. And then we have office expenses, administrative expenses, office salaries, rent, insurance, things that have to do with the administration side of a merchandising business. So we are going to split our expenses into two different types. We're going to do selling expenses first. So I'm going to just press my space bar twice to move this in, selling expenses. And put another, whoops, that should have been a colon. And then I'm also going to indent to sales, salaries, expenses. So I'm going to press my space bar 5 times, 1, 2, 3, 4, 5. And the first one we have, again, is sales, salaries, expense. And I'm going to put this in the first column because we're going to be doing some math here with these numbers. The next one in our list is advertising expense. And again, I just press that space bar 5 times. Depreciation for our store equipment. And you do need to type out the store equipment part so we know what that depreciation is for. Now, most companies use computers to do their accounting, so that word would not disappear. If you're doing it by hand, you might put the word equipment on the next line down. In Excel, I'm just going to make that column bigger. And then the last one we have here for this category is miscellaneous expense. They have it listed as miscellaneous selling expense. And that one was $18,000. Okay, so now I just press my space bar 7 times, and I'm going to find my total selling expenses, and I'm going to put that in the middle column. And again, I'm going to use an Excel formula. I'm going to take the sum of cells B9 to B12. Again, you can use a calculator to do that and just type in the number, or you can use that, that Excel feature. Okay. So I have my total selling expenses. Now I'm going to go for my administrative expenses. So press and space bar twice, administrative expenses. Now I'm using my space bar to make these indentations. You can use, Excel has a indentation button right here where you can make things indented. Totally your call. I feel like when I'm typing things, it's more of a hassle for me to keep going up there to click on that button. So I am just listing the administrative expenses that are on my problem. Oops. And then depreciation. And again, you need to list this office equipment so we know what kind of depreciation we're looking at. Office supplies, things like pens, paper, tape. You never know what you might need. And then our miscellaneous. Is 6,000. Okay. Our total administrative expenses, again, using that sum that Excel works with. So we can see that our total selling expenses were $1,321,000. Our total administrative expenses were $632. Okay. So now we're going to find our total expenses overall. So total operating expenses. In this third column, I'm going to add together, and I'm using it, that Excel feature. I'm going to take this one and add in this one. So I find out that my total operating expenses are $1,953,000. Okay. Now, my next step is to find my operating income, and I find that by subtracting my gross profit, minus my total operating expenses. And I get $1,352,000. Okay. And then I have a little bit of other revenue here. If I look on, a little bit of other expenses. If I look in my problem, let me pull this over. At the very bottom, we have this very random interest expense for $12,000. We need to account for that. So I have other revenue and expenses, and I'm going to have $12,000 in there. Whoops. I apologize. We're going to do interest. We got to tell it what kind of other expense it is. We have interest expense. $12,000, and then our net income is going to equal our operating income minus that $12,000. Okay. Now a couple of things. I need a thick black line under that one to show I did a math, and a thick black line under that one to show I did the math. The same thing with our 6,000, our 632,000, and our 18,000. Okay, and again, those thick black lines just show that this is where my math stopped and I did something. In this column, that's where my math stopped and I did something. It's just showing where the math came from. Now, this is our income statement. We don't know if that number is right or not. We hope it is. We hope we did everything correctly. But we will not let me try that again. We will not double underline that until we complete the rest of our problem. Okay, so the next step is going to be your statement of stockholders' equity. And again, just like the other one, first thing we're going to do is fill in our company name. And this one is also for the year ended of June 30th, 2017. Okay. First thing we want to know is what were the balances as of July 1st of 2017 or 2016, which would have been the end of the previous year. Okay. Now, if we look on our problem, let me bring my problem over here so you can see where I'm getting my numbers from. It says our common stock is currently 50,000. Okay. And it tells us that additional common stock of 75,000 was issued during the year ended. So if we take that 50,000 and subtract the 75, that tells us our beginning amount. Okay. So again, I'm taking this 50,000 that my balance is right now, subtracting the 7,500, and that gives me my beginning balance of common stock. Okay. So my beginning balance of common stock, and again, I'm going to use Excel to do the math for me, is 42,500. My beginning balance of my retained earnings, it doesn't say anything in my directions about retained earnings changing at all throughout the year. So my beginning balance of retained earnings is 381,000. And then I add these two numbers together to get what goes in my total column. Okay. Now I need to know how much common stock was issued throughout the year. In my step 2 under my instructions, which we just read, said 75,000. So then my total is, 7,500. So my total is 7,500. My net income, which only affects my retained earnings. My net income, if I look back on my income statement, was 1,340,000. Again, you can type that in or you can use Excel to fill that in for you. So my total is the same. I need to know about my dividends, how many dividends were given out this year. And if I look on my directions, it tells me I had $300,000 in dividends. Okay. I'm going to list those dividends as negative numbers to show that they're going to affect my balance in a negative way. And then I'm going to calculate my balances as of June 30th, 2017. Okay, so I am just going to add each column together. Now here's a little Excel trick. So I'm using my sum in that first box. Okay, and even though there was nothing in these two squares, I still made them part of my equation. And the reason behind that is because if you look at my mouse, I can change it into those two crosshairs, those skinny black crosshairs, and drag it over, and it automatically fills in the rest of my boxes. Okay. Now,
I'm all done here.
So now that we have the equations correct, we're going to put that single thick bottom border. And again, if you're doing this on paper, you can just draw that line under there. We think that we have this right. We did the math. We hope we did the math correctly. We hope that Excel did the math correctly, I should say, in this case. But I can't double bottom border it and say that I know it's right until I do my balance sheet. Okay, so my next stop is my balance sheet. So I'm going to come down here and click on this one. Switch some papers around. I'm going to pause here for a moment. We had a repairman and they were backing out of our driveway. So, okay. So again, on your balance sheet, the first thing we're going to do is fill in the company name. And on a balance sheet is a snapshot of what is happening at that specific moment. So instead of doing a 4-year ended, we're just going to put in the date of June 30th. Because this is something that can be created at any time. Honestly, all of these financial statements can be created at any time. So we can turn this into just the date, not the entire thing. I'm sorry, that is not how the date should be. There we go. There it is. There we go. Okay, so the first thing we do on our balance sheet is list our assets, and we're going to center that word assets. Okay, you can make it bold if you want to. And then we are going to break down our assets into current assets and long-term assets. Current assets are anything that can be turned into cash within a year. Okay, anything that we can, if we need it cash quickly, we can sell it quickly. Okay, so under current assets, I'm going to indent. I just press enter 5 times. Again, you can use the indentation option, or you can just use your space bar. Give me a second. Let me turn this into commas. There's no decimals. Okay. So the first one is cash. And again, I'm just pulling these numbers right out of the problem. Accounts receivable. I'm putting these in the center column because I only need to do one math problem with them. Oh my goodness, I can't get the right number of zeros. There we go. Okay, so the next thing I'm going to list is my total current assets. And again, I'm going to use some Excel magic. That sum operator equals sum of, and then highlighting those cells is magical. It does things for you. The next type of assets I'm going to list are called property, plant, and equipment. Property, plant, and equipment are assets that cannot really be turned into cash within a year. It's not something that you would normally get rid of quickly, okay? The first one is our office equipment. Again, indenting those. Office equipment I'm going to put here on the left because we also have to deal with the depreciation of our office equipment. Oops, I'm in the wrong cell. So accumulated depreciation of our office equipment is, and I'm going to put this in parentheses to show that I'm subtracting it, $58,000. I'm also going to adjust my column here so you can see what it is. Great. Underneath that, I'm going to list what the current book value is of my office equipment. Indent that one a little bit further. Book value of the office equipment. And I'm just going to subtract these two numbers. Okay. I said subtract these two numbers. You'll notice I put an addition sign in there. That's because I have this one listed as a negative. If you put those parentheses around there, Excel reads that as a negative number, so you want to add them together to get them to subtract. And I know that sounds weird, but that's just the way that Excel works. Okay. Now I'm going to follow the same steps for store equipment. So I'm going to list my store equipment. In the first column, I get $650,000. And then I'm going to list my accumulated depreciation for my store equipment. Again, listing it in parentheses to show that I'm going to subtract it. Oh my goodness, I apologize. Having one of those mornings. And then I have my book value of my store equipment. Oh, 562,500. Okay. So those are the only two things that are property, plants, and equipment. If I look at my directions, give me a second. Let me pull those back over. If I look at my directions, I use everything up until accounts payable. Okay. And we know accounts payable is a liability. So I'm finished with my asset section. So I'm going to list my total property, plant, and equipment, just like I did my total current assets. Total property, plant, and equipment. All the way over in the third column, I'm going to add these two book value numbers together, and I get 724,500. Okay. And now I'm going to find my total assets. So total assets, I'm going to take my current assets of 939 and add in my 724,500, and I get total assets of 163,500. Okay, so let's look as we go. We need a thick bottom border, and again, you would really draw these lines as you're doing the math, and this is one of my downfalls when I do it on the computer versus on paper. Everywhere I've done a math problem, I need a thick bottom border underneath it. Okay. So this is my total assets, and we know from the beginning of this class that assets equals liabilities plus owners' equity, or in this case, stockholders' equity, right? So right now we need to see, this is our assets. So right now we have 166,500. We need to see if this is going to equal our liabilities and owner's equity. Okay, that's our goal. So underneath total assets, now that we have that one, we have liabilities. And liabilities is going to be just like the word assets. It's going to be centered in the middle there. And just like assets, we're going to start with our current liabilities, which the first one is accounts payable. In this one, we don't have to calculate depreciation, so I'm going to start these numbers in the middle. Salaries payable. A current asset, much like a current liability, is anything that can be paid off within a year. Okay, so the test for anything is pretty much a year. Customer refunds payable. So again, anything that can be paid off within a year. Now the next part says, the next part that we come upon in our directions, we just did customer refunds payable. We've done accounts payable, salaries payable, customer refunds payable. We're at notes payable, okay? And notes payable tells us that the final payment is due in 20 years. If we come down to our directions, move the video up, prepare a balance sheet, assuming that the current portion of the note payable is $7,000. What that means is this $7,000 is what we can pay off in 1 year. So this is our current liability. When we get to our long-term liability, we're going to take this 140 and subtract this 7 that we're going to pay off this year. Okay. So when we list notes payable, we're going to also type in here our current portion so that whoever reads our report is aware that there is more to our note payable than just that $7,000. Okay. So the next one, that's all of our current liabilities. So we are going to total current liabilities, and we are going to add these numbers together. And we get our total current liabilities of $59,500, and I'm going to put my line under there to show that I did my math. Okay. The next section is going to say long-term liabilities. Now, we only had one long-term liability, and that is our notes payable. And in this section, it's going to say the long-term portion. And this number is going to go straight out to the right. There's no math to be done with this except for calculating that 140 minus the 7,000. And again, you can do that by hand, or you can, and just type the number in, or you can have Excel do that for you. So then our total liabilities is going to equal our total current liabilities plus our total long-term liabilities. Again, we need a thick bottom border there. I apologize. I didn't have enough boxes here. I will make sure to fix that before I upload this. Okay. So again, thick bottom border right here to show that I did some math there. The next section is our stockholders' equity. Oh, more than one stockholder. And this one is also going to be centered to show that this is a whole new section. So we're going to pull, a lot of these numbers are going to come from our statement of stockholders' equity, right? So we know that our common stock, our balances as of June 30th is where we're going to get these numbers from. Our balance, on our common stock is 50,000. So we're going to stick this in the middle. Oh. Okay, and then we're going to list our retained earnings. It was 1,421,000, which tells us our total stockholders' equity. I apologize, that one should have been indented. Is going to equal this 50,000 plus this 1,421,000. Since I did math there, I need that double underline. And I get 1,471,000. Let me go back to my statement of owner's equity. 1,471,000. So that's correct. Okay, so I've got some math right. The next line is going to look for our total liabilities, and stockholders' equity. So in this one, we're going to take 192,500 plus 1,471,000, and we get 163,500. Now, double underline. We know that our assets, 1,663,500, should equal our liabilities and owner's equity, and it does. So now we are able to put a bottom double border to show that we checked these numbers and they are correct. Okay. We're also going to go back to our statement of owner's equity and do the same to these, because now we know they're correct because our balance sheet turned out correctly, and the same here on our income statement. Okay, so don't forget to go back and do those bottom double borders to show that you have indeed checked these numbers and they are correct. Okay. If you have any questions on your project, on this problem, please feel free to jump in and give me an email. Use the inbox on your Canvas classroom, which is over here on the left, and have a great day.